Friends, today I have an update with regards to seven power sector stocks which are under 100 rupees in share price. These have a good profit margin of around or above 20%. So something I believe that you could keep this as a part of your radar to keep a track on how these are performing, and maybe you can consult an expert or a stockbroker to see if investment in these stocks are viable as a long-term strategy. So important here, these are operating profit margin of 20% above indicates strong business efficiency and pricing power. Finding such stocks priced below 100 rupees suggests hidden value in the market. For investors, this presents an opportunity to tap into a profitable business and for the industry. However, as I said, please consult a qualified financial advisor or broker before you make any investment decisions. NHPC Stock Limited with 88,406 crores currently trading at around 88 rupees. Company has a operating profit margin of 46%, a net profit margin of 39.2%, FY25 full year margin of 53% and 32% respectively. Uh, so there has been a slight decline from the FY25 margin, but something that is still well above, good industry return across most sectors. So NTPC Grain is the second stock, 94,500 is the market cap, around 108 rupees the current price, operating margin of 90 and a net profit margin of around 37%, both higher than the FY25 full year margins. So just a quarter on reflection of overall year profits. So it suggests this growing trend. Uh, Full margin was 87% in the year, and 21% was the net profit margin throughout the year. So the quarter shows a good significant improvement there. However, despite solid margins, the stock trades at a steep price to earnings ratio of 190, which is a very high concern, and sorry carries a debt to equity ratio of 1.05, highlighting rich valuations and moderate financial leverage. The third stock is SGV Limited with a smart market capitalization of 38,300 crores, closed at around 97.5. Uh, Q4 FY25 operating margin was 48%, sharply lower than the full year average of 72%. So, overall net profit margin turned into negative compared to the overall year's net profit margin of around 26. So, slight of a concern, though, on the broader trend over the long term period, you can see that. There is a scope for growth. However, on the immediate term, there would have been some sort of market correction when the Q4 FY25 results were announced and the net profit turned negative to minus 25% for the quarter. So that would have definitely impacted the stock price. However, uh, if it's able to continue the previous months, previous quarters trends, and get profitable again, you will see that the price would start going up again. So again, it won't be immediate, it would be over a next 1 to 2 quarter or 3 quarter consistent performance would require it to start gaining that momentum back again. So it's important to keep track of the trends for the next 2 3 quarters and see how it performs, and an expert would be able to guide you to let you know whether there is a good scope of growth there or there could be further correction in the price of the stock. So the fourth stock here we have is Jay Prakash Power Ventures. This has a market capitalization of 16,240. The current price is around 23.7 rupees, higher of for almost 3% from the previous closing price. Operating net operating profit margin of 29%. and a net profit margin of 11%, lower than the FY25 results, which was a full year margin of 34% and a 14.9 uh, percent as the net operating profit. So lower than the overall year's performance, something that would definitely keep a track of, or should suggest you keep a track of. Over the last 3 years, the strong CAGR profit grew by 96%, supported by 6% sales growth year on year and a 7% return on equity average year on year again. So compounded average growth rate. So each year the growth is achieved at an average of 7%, indicating healthy earnings despite modest revenue and return expansion. Then the fifth company today we have is Orient Grain Power, 1,772 crores, closed at 15 rupees, a high of 1.6% from the previous close. Uh, Q4 FY25 operating margin was 38%, below the full year average of 64%. So a slight of concern, while the net profit turned negative minus 36% compared to the overall year performance of 15.97%. So ideally, the power sector revenue must have reduced due to an early monsoon or early rains coming in and disrupting the cycle overall. However, maybe the Q4 FY25 results would be impacted possibly due to lack of energy demand. That could be the only reason why you see, two, three companies not being able to achieve their previous quarter results, so overall yearly results, which would indicate that, we had a much colder winter and less of power consumption in the earlier months of maybe January, February, March. So that is the last quarter of the year. So that could be because of cooler winter months, and the onset of summer may have been delayed in the month of March to a certain extent. The heat wave may not have been as expected to the previous year. The previous year, the heat was far too much, and that could have driven the energy requirements in the sector higher compared to the overall year, which could have raised the demand for energy and the price as well as revenue and the operating margins as well. So that could be one of the reasons. Overall, in the past 3 years, the profit has surged at 73% CAGR, which is compounded annual growth rate, despite 5% drop in sales. Again, you can see year on year there has been a negative 5% revenue drop, which again shows that inconsistency in generating new demand and revenue. So this is a sort of a negative factor that could impact the overall value of this stock. Continuous drop in the revenue. However, if that revenue drop is supported by an increase in net profit, then you would still see some value addition in the stock price. So overall, you can see profit has surged at 73% in the last 3 years with a drop in revenue. Clearly signifies better ways to manage, performance and operations, which lead to higher and healthier profit margins. So overall, that is the reason why the company is still doing well on terms of the price value and adding more value for its shareholders. So the next stock is JSW Energy with a market cap of 91,425 crores. Hit a 523 down by 1.4%. The Q4 FY25 operating margin was 38% and the net profit margin 13%, lower than the full year margin of 44% and 16.9%, indicating some margin contraction. So again, the same theory applies. Cold winter uh, drop possibly drop in the power requirements at the onset of the summer, cooler summer or a delayed summer. That could be the only reason why there is some contraction in the revenue and in the net profit in the last quarter of FY25. So over the last 3 years, profit has grown at 2%. That is an annual growth of 2%. So that is more in line with managing its operations well, supported by a 13% growth in sales. So this company shows the opportunities of growth, maybe through its different strategies that it may use steady revenue growth but limited improvement in profitability. So the revenue growth is there, however, the net profit growth is just minor 2% there. Last but not the least, we have ATC Energies Limited with a market cap of 165 crores. This is a very small company trading at 81 rupees. Q4 FY25 results at 30% operating profit margin and a net profit of 20%, which is slightly lower than the year's average of 32 and 21.5. So slight drop, but overall more healthier performance compared to the overall, other sector operators. So you can see profit declined marginally by -1% in the last 3 years. So healthy 12% growth in revenue. However, that is not helping in improving the net profitability or the profitability of the company. Return on equity is about 28%, which is very good, solid compared uh, to the overall investment made by the shareholders. However, there is pressure on the bottom line because of the high value investments overall used in the sector to meet the requirements of the customers and the industry. So more of borrowed capital, I believe. So thank you for watching, friends. We'll connect with another video very soon. Take care. Have a lovely day. Thank you.